Hi everyone, hope everyone's well. Welcome to the 11th Australian Securitisation Forum Annual Conference ASF 2012. Before we kick off, just a couple of housekeeping announcements. Please make sure your phones are on silent. And for the most up-to-date conference information, please use the conference app, which can be downloaded by entering asf2012.mobi on your web browser. So more importantly, make sure your phone is on silent if you can do it right now. And very quickly, my name's Ricardo Gonçalves. I am the news presenter for SBS World News Australia and a business reporter for the network. And before that, I was the business anchor for the Sky News Business Channel and a business reporter for Sky News. Let's get straight into it. I would like to welcome the ASF chairman to the stage, Tim Hughes.
Thank you, Ricardo, and thank you, everyone. Ladies and gentlemen, colleagues, peers of the securitisation industry, friends, gives me great pleasure to stand here as your chairman for the past 6 months and welcome you to the 11th annual ASF conference here in Sydney. We have over 380, Good start, Tim. We have over 580 delegates registered, a fantastic number, given the interesting times that we're facing and the industry changes overall. But I think we've got a fantastic conference lined up. We've got, I think, about 300 registered for the dinner tomorrow evening. As I said, I think we've got a great conference lined up at a time where we're starting to see some rejuvenation in the securitisation industry. If we think back 12 months ago at our last conference, we were struggling to see where deals were going to get done, particularly as Europe was imploding and the markets were very nervous and the outlook longer term was certainly not looking very promising. That volatility still very much lurks in the background, and I believe in particular that there is a long road ahead in terms of particularly Europe coming out of its crisis. But there are a number of things that don't change, one of those being, of course, Queensland winning the State of Origin once again. However, I digress. In the past 12 months, we've seen a lot change in our industry. We've seen the major banks issue covered bonds, and of course Suncorp, at what were initially eye-watering spreads for that particular security. These spreads at 175 and 165 are now trading at 60 basis points over. So obviously there's been a bit of a wake-up call in the market. And I think investors, and I can apologise to any investors in the room. I'm actually a large investor in securitisation myself. But the penny's finally dropped that if a AAA covered bond is trading at 60 basis over for a 4-year plus period, then a AAA rated RMBS at 140 points over represents pretty good value. And I think certainly what we've seen in the most recent issuance out there is spreads starting to narrow in and that we are starting to see significant interest out of the investor community. I know on our deal alone, which was about 6-8 weeks ago, we had seen more investors in the sub-note tranche than we'd previously seen. And certainly that was very encouraging. We had 7 investors in the AB notes. And I think this is really good for the industry to start to see that sort of investment come through. It's particularly good as we want to concentrate, with no disrespect to Michael Barth if he's here, or Julia, we do want to see the AOFM or the dependence on the AOFM reduce, and certainly I think the signs are there and the market's looking much more promising. Offshore players are also back. not in droves, but we are seeing a resurgence, particularly out of the Asian market, particularly out of Japan. We've seen some structured transactions in US dollars. So there is definitely an interest out there from offshore investors in looking at Australian-denominated securitisation. And dare I say it, but the cross-currency swap is also starting to work, albeit slow. It is encouraging, and I think that certainly, another 12 months of positive direction for our industry, and we will start to see a significant increase in that offshore participation again. So what's the ASF been up to? I'd encourage you all, and it should be on our website this afternoon, to read both my report, the Chairman's report, and all the subcommittee reports that were released at the AGM today. There's a lot been going on, but to summarise briefly, we've done a tremendous amount of work with industry and with regulators in terms of working on our prudential standards, and hopefully this afternoon Charles Luttrell will talk about that, talk about some of the work that's been done and put forward some interesting comments around where APRA currently stand. In addition, we've got Guy Debelle here from the RBA, and certainly we're hopeful that Guy is going to introduce and talk about what's happening as far as the RBA is concerned in respect to securitisation also. We've made significant outreach to offshore investors in the last 12 months, and most recently from our Asian trip, particularly out of Tokyo, we had 120 participants at the Australian Embassy in Tokyo. So there's obviously considerable interest in learning more and more about the Australian securitisation market. In addition, we've released the Australian Securitisation Journal, which is a biannual publication that will outline what's going on in the industry, what we're working on behalf of members, what the subcommittees are doing, and provide open and transparent communication across the business and across industry. So what's in store for the next day and a half? And I think we've got a fantastic conference lined up. As well as some great topical panels. I mentioned we've got Guy Debelle here from the RBA, then Charles Luttrell later this afternoon, followed by Greg Tanzer from ASIC, and closing today's discussion with a panel with Charles and Greg as an open forum. We'll follow up later this afternoon with some networking drinks, and that should be a good opportunity for everyone to get together and say hello. Tomorrow we lead off with Dr. Ken Henry, and one of the things that we've worked on this year is having Ian Harper from Access Economics work on a bond and fixed income paper that talks about the issues around the Australian market. Ian will be here tomorrow, and there'll be a session tomorrow where that paper will be released, and he will outline his thoughts around where that's going. We've got dinner tomorrow night, of course, hosted by the ANZ, and we thank them, with guest speaker, 7-time world surfing champion Lane Beachley. So I'm looking forward to that. And then followed and closing up with the fantastic First Mac after party. A big thank you to all of our sponsors, to Moody's and NAB, our gold sponsor, ANZ, as I mentioned, our dinner sponsor tomorrow evening, our silver sponsors, Perpetual and Westpac, and all of our bronze sponsors, CBA, Fitch, Genworth, JP Morgan, Norton Rose, QBE and S&P. RBS we thank for our badges, and Deutsche Bank very much for our coffee fix. So we appreciate all the effort there. And again for our wonderful networking after party, we really thank Kim and his sponsorship from First Mac. And I need to make an apology to Kim. As you know, last year there was relief on a number of people's faces in this room when they came to me asking me where Simon Lewis was. At the time, I had to tell everybody that we're in the middle of an Apollo transaction and Simon wouldn't be able to make the conference. All of you that spoke to me shed a big sigh of relief. And at the after party, Kim couldn't quite work out why, after a couple of hours of he and I sitting and having a lemonade, his bill was so low and that turnover was down. Well, unfortunately for all of you, the Big Red head's back this year, bigger and better than ever, and looking to make up for lost time. So I apologise for that. In all, we thank you for your attendance. We have got a great couple of days lined up. I look very much forward to catching up with all of you here in the next 24, 48 hours. Thanks again to all of our sponsors, and I'll hand it back to Ricardo. So thank you very much.
Thanks, Tim. We've got a couple of slides to go through, and we'll go through those nice and quickly so we can stick to time before we get to our three guests this afternoon. First of all, a quick market snapshot. Of course, we've seen a good end to the year for RMBS following a slow start and global market dislocation. Covered bonds have seen a very good run since last November, and ABS possibly the best performer into numerous markets, currencies and collateral, and performance remains very robust with arrears and CPR stable. What we are going to see next is this is what's out there outstanding at the moment. We've arrested the collapse in liquidity, but we still need to get those offshore investors back as the foreign currency tranches remain slim. Moving on, RMBS is almost half of last year's issuance, but last year was quite extraordinary, which is owed to banks issuing and buying to support their collateral in the RBA's committed liquidity facility. And as you can see, non-AUD RMBS, in contrast, almost doubled due to huge covered bond issuance, and ABS has stabilised its share too, but fell from a very high base. Now, this chart shows all quarterly securitised issuance pre and post GFC, and ABS here is a big loser post GFC, and we'll explore why with our investors a bit shortly. Now, RMBS issuance has recovered significantly in the domestic market, largely by no means exclusively due to AOFM support and CLF-related activity. Just a couple more to go through. As we saw earlier, major banks issuance, that's the green part of that bar, spiked last year due to CLF preparations and has now pared back. Again, we know that much of the major bank issuance this year has been in covered bonds, and total other bank issuance for the year to date is just over $5 billion compared to $5.7 billion from 2011. And just finally, ABS is showing signs of being a great non-AUD product with basic swap costs lower and the tenor very much appealing to US and UK money market buyers. So let's now turn to our investors. So I'd like to call up to the stage Robert Camilleri. He's the investment manager at Realm Investment House Melbourne and managing several $100 million. He has held senior fund management positions and chaired and sat on a number of peak industry committees and task forces. He's also the chairman at ASF Education Facility and has worked at ANZ, Norwich Investments and Portfolio Partners. Robert Camilleri. Also coming up, Henry Cook, the European Head of Secured Credit and Threadneedle at Threadneedle Asset Management in London. He has 25 years' experience in securitisation and previously was the MD in the real estate group at Barclays Capital. At Nomura, he ran a trading desk for the Principal Financial Group. Please welcome to the stage Henry Cook. And finally, from Japan, Horishi Oki, the Director and Executive Officer of SBI Bank Holdings. He manages the investment department there and loan organisation department. He has also joined the bank as a director in 2009 and has more than 20 years' experience in banking and has extensive knowledge of the mortgage industry and RMBS structure. Please welcome to the stage Horishi Orki. He'll also be accompanied by Mas Amiya, just to help us out with some translation if we need to. So we've got lots to go through in a minimal time, as usual. So, Rob, maybe if we start with you and we set up the day, what needs to be discussed at this year's ASF conference, and I guess what messages will you be conveying to those you meet about your expectations from the Australian securitisation and covered bond market?
I think, and I think a lot of people that know me, I've been talking over the last couple of years a pretty consistent message, and that's really been around certainty. And certainty for investors means certainty around ratings, certainty around regulation, and certainty about outcomes. From an investor's point of view, and I look at my clients that I manage money for, they're looking for the same thing. As Tim said in his opening remarks, the RMBS sector represents phenomenal value when compared on a relative value basis. But what it lacks, and I think what that differential in spread does represent, is that lack of certainty. So we are getting closer, and I think 2013 may be a better year for that certainty, but I think we still need to tick some boxes on the regulation side. So we'll hear a little bit more about that this afternoon, but that's where there's been a lot of change, and for investors, when you're uncertain, the best thing to do is not to invest.
Before we go on, we did that so you get an idea of the kinds of things we're talking about. Don't forget this is also a forum for you guys, obviously, and if you've got questions, make sure you send a text message to the interviewees. We'll be going through those questions also. The number is on your screen right now, 0429 883 481. Please ensure you enter the code ASF 2012 and include a space before you type your question, and you can also send messages through the sessions questions link of the app. Also an idea, think of it as a Twitter message, only send about 130 characters, that's what the system can read. Henry, if we move to you, what are you looking to be discussing at this conference?
I guess I have a slightly different perspective and probably fairly self-interested, but from a European perspective, we have a massive shift in our market, and looking over at Australian RMBS, it's very tempting to look at it and think looks like there's extreme relative value in that the Aussie RMBS market particularly, but also some of the other sectors look very attractive. We've seen a massive tightening in spreads in our own market, something pretty unprecedented. And really, I guess one of the issues for the rest of the world is whenever you talk about Australian RMBS, they go, oh yeah, but there's an Aussie housing market bubble and it's all going to blow up anytime soon. I actually don't think that's the case at all. And in fact, I think living in England, we've got plenty of problems with our own bubbles. So, but one of the things I'm really keen is to kind of really get a feel for what's really happening, particularly in the RMBS market, at the sort of loan level where people are struggling to make payments, what's happening to the Aussie consumer, and really what we can forecast in terms of losses.
We've got a nice cross panel here in terms of domestic Europe and Hiroshi from Japan. What are you looking to get into here?
Okay, firstly I have to say I will talk in Japanese. I understand his questions, so I will say in Japanese. So, 2010年からですね、私たちの方はですね、RMBS に関して投資してるんですけども、欧州の RMBS に関しましては、仕組みのシンプルさ、強固さ、そしてパフォーマンスがいいということで理解しております。しかしながらですね、日本の投資家にとって認知度はそれほど高くありませんので、この場ではですね、日本の投資家の目線でですね、欧州の証券化商品をですね、どのように捉えているかお伝えしたいと思います。
His company SBI has invested in Aussie RMBS since May 2010. The main reason why he invests in that product is that he thinks that the main features of Australian securitized products are twofold. One, the simple solidified structure, and two, good collateral performance. However, many other Japanese are not familiar with Australian securitized products, but he does. So he'd like to talk about how he's seeing the Australian securitization market from a Japanese investor's perspective.
でカバードボンドに関しましてはですね、当社にとって証券価格と比較するとですね、優先順位低いんですけれども、ダブルリコースのメリットはありますので、発行体とですね、担保資産の両者のクレジットを慎重に精査する必要がある点とかですね、スプレッドの問題などが障害になっています。ただですね、私の考えとしては大半の日本の投資家も同じように思うと思います。
As far as covered bonds are concerned, it is beneficial for investors that they are protected by the double recourse scheme. However, as he thinks that he needs scrutinize both issuer credit and collateral credit backing bonds, and that spreads on covered bonds are tighter than those of RMBS. He basically prioritized these investments in RMBS over covered bonds investments.
そうですね、最後にですね、ただそうは言ってもですね、日本の投資家は侍債の投資に関してはもう意欲的になっておりますので、カバードボンドもアプローチによってはマーケットは大きくなっているかなと思いますね。
Considering that Japanese financial institutions own large amount of yen to spend, there is a huge demand even for samurai bonds, although the samurai bonds market was temporarily halted after the financial crisis. Therefore, he suggests that Australian institutions should also think to issue yen-denominated covered bonds.
Don't forget, you can send through your questions to that number on your screen, and if you would like to direct a specific question to that person, just put that person's name in that message. Rob, let's talk to you as a domestic investor. And before we talk about Australia specifically, what have you been seeing this year in global RMBS and ABS markets? And I guess as an extension, where do you see Australia in that global picture?
Well, I think the big opportunity for the Australian issuers and the banks is to start to look offshore. I think there's definitely issues in Europe that still need to be addressed. As an investor, I think those denomination issues are becoming front of mind. However, out of the US, we're seeing structurally that that market is ready to take the outside interest, and we're seeing a suite of deals get done in the US from Aussie issuers. So I would see that trend starts to continue and actually becomes probably the dominant feature for next year. So tapping the US market will be a key strategy for the US investor, for Aussie issuers out in the US. I think the story's good. And we have got a good story to tell, and I think taking advantage of that opportunity is going to be very good for our market here.
Henry, curious to get your opinion also, because I know that when we report on our news program, the European issues are pretty much always dominating the headlines. But how relevant is the European and US debt problems to your decisions about Australian RMBS and RMBS generally as an asset class? And again, when you look at Australia's role, where do you see it?
Well, I think what's really had a massive impact in US and European markets, obviously driven by European problems and the way central banks have tried to deal with those. And generally, what their real issue is, they want to try and increase the availability of credit into their domestic real economies. And traditionally, the way they do that has been to use interest rates, lower interest rates, try and stimulate borrowing. That sort of transfer mechanism hasn't really been working, and so the central banks have been more and more focused on what can we actually do to improve the lending to SMEs and improve the affordability of housing to try and stimulate growth in the economy. And the way they've approached that, in Europe particularly, had an enormous impact. So if you look at the UK, the Bank of England has come up with something called the Funding for Lending Scheme, where they're basically saying, if you're actually growing your loan book, we'll fund your lending at effectively a fixed interest rate of 65 basis points. So if you're doing mortgage lending, we'll fund you for 4 years at 65 basis points. And if you compare that to RMBS issuance, at the time they started was trading at 140, 150 over LIBOR. what that's really done is mean that those banks are just not going to issue, because it's very hard to justify to your shareholders funding a business, 100 plus basis points wider than where you're being offered money by the central bank. A similar thing really going on in Europe. So what that has meant is that spreads have been driven. Well, the expected issuance in Europe is virtually going to zero for the foreseeable future, probably for the next 4 or 5 years. At the same time, the US investors are seeing probably one of the best performing asset classes for them coming out of the crisis was credit cards, and they've seen that performance very well. So if they're looking for short duration assets in the US market, that really forces them into the auto and credit card sector. They look across over to Europe and they can see our UK RMBS Master Trust, similar average life, and they've started to buy those in absolute droves. So we've seen a huge shift, a huge increase in investor demand for the asset. Now, as I said earlier, what that really means is we've seen a massive tightening in spread, and certainly for the Australian RMBS issuers, that means that the product is suddenly becoming much more appealing because there is a little bit of supply, but most importantly, the spreads haven't seen the tightening that we've seen, particularly in Europe. So I think that is going to dominate really what happens over the next 12 months or so. Yeah, I understand there are issues with the basis swap, but actually, the tightening of spreads in Europe particularly has actually really started to diminish that as an issue for Aussie issuers. And I think that drive by UK central banks to try and stimulate lending in the real economy, slightly unintended consequence, no issuance of RMBS in Europe is going to bring investors to the door.
Hiroshi, let's get your take on it as well. What have you been seeing this year? And also, if I can add to that as well, just a question from the audience as well that ties in that what needs to happen for that wall of money that we're seeing in Japan to flow into Australia?
そうですね。一般的にですね、日本の投資家にとっては海外の証券化商品というとまず米国のですねエージェンシーとかですね、または次に行くのはやっぱり英国の RMS なんですけれども、オーストラリアについてはですね5ドルの運用がニーズが低いので、今後ですね基本的な理解度を増やしたりですね、証券化そのものにまず理解をですね深めなければいけないというのがまず第一にしたいと思います。
In general, Japanese investors have invested in U.S. agency MBS, including CMOs, CLOs, UK RMBS, and so forth. However, they need to consider a couple of things when they decide to invest in Australian dollar-denominated products. Number one, funding. Number two, fundamental knowledge about Australian market, and three, and a product knowledge.
またですね、ちょっと東京の拠点でですね、やはり豪州のですね銀行証券会社の方がですね、やはりその活動が活発的ではないので、どうしても日本の投資家をですねターゲットとしたいのであればですね、まず RMBS の継続的な発行とともにですね、豪州の証券会社がですね、東京の拠点を通じて販売を行うとかですね、またはですね東京に拠点になる証券会社とのですねリレーションシップをつかめてですね、頑張っていただきたいなと思います。
He's suggesting that Australian financial institutions which issue regularly RMBS and pay special attention to Japanese investors through their, if possible, like their Tokyo branches, especially like follow-up activities such as performance updates are also important.
ただですね、RMBS が継続的に発行してですね、日本の投資家も計画できるようになればですね、実際先ほどもお話ししましたように豪州の銀行の侍債はですね、個人にも発行されておりますので、認知度はかなり高まっています。でまたですね、10年国債などはもう2002年以降ですね、日本に関して 2% 下回る水準ですので、特に最近1年では 1% 割れもありますので、クレジットスプレッドはかなり潰れておりますので、また日本の RMBS のスプレッドは20ベース程度ですので、ストラクチャーをですねうまくすれば豪州の RMBS もですねかなり魅力的な商品ではないかなと思っています。
If yen-denominated tranches are continuously or regularly issued, it is easy for Japanese investors to make investment plans. In other words, they avoid risks that they cannot spend money, which is allocated by planning departments. The clearer an issue calendar is, the larger the chance that many investors get involved in the deals. And also, he said the 10-year JGB yield has been below 2% since 2000 and less than 1% since this April. In addition, spreads of Japanese RMBS are only approximately 20 basis points. Compared with those low yield products, Aussie RMBS is much more attractive to most Japanese investors.
Robert, correct me if I'm wrong, this might be one of your pet topics, so you might have something to say about it in terms of RMBS and ABS. Is it too hard for most fixed interest investors in terms of initial and ongoing credit work?
Look, there's probably, you could say yes in one instance and no in another. I mean, understanding the RMBS market, I think one needs to really understand what they're buying behind their securities. And I think, the market sometimes gets that confused and we see a lot of commentators talk about the linkages of the Australian housing market and the RMBS market and the bubble. But really, at the end of the day, we're financing loans, so it's the strength of that loan contract. And most fixed income investors can understand that, and they can dissect that, and they can analyse the loan contract for what it is. The collateral that sits behind that is very easily analysed as well. So I don't think it's a complex sector to analyse, but I think once you start to break it down into those areas, it can be a relatively easy sector to put on your radar. I think the complexity does come into the sort of the structural features sometimes within the financing structure. The predominant part of the fixed income market is a bullet, benchmarked market. So RMBS, where does it fit? We go back pre-GFC, it was typically, a lot of demand out of cash type products because of the floating nature and the high rating and low risk nature of the issuance. The market has somewhat changed now. So we're trying to find where our natural fit is going to be in terms of that fixed interest space. So, you can see the success that covered bonds have had, given that bullet type issuance. I mean, really at the end of the day, when you look at a covered bond and the OC and the guarantee of a balance sheet, compared to, against loans coming off that same issuer, closed funding structure that has its own credit enhancement, the risks are somewhat weighted. But, why has covered bonds actually performed so well? Well, you've got that bullet maturity, you've got that certainty of redemption, you've got tradability, there's certainty around the repo, there's a market infrastructure that supports the dynamics around liquidity, borrowing of the stock. So there's a whole range of other things that the market can understand much better. When you look at RMBS, there's still a layer of challenges around the infrastructure of the market that almost goes into that too hard basket sometimes.
And Henry, just your take on it. Is there too much ongoing credit work with fixed interest investors?
I don't know. I think anybody who could understand the instructions on how to send a text message earlier could probably figure out any kind of RMBS structure. I think it's one of those things. Are they complicated? Probably, but it's difficult for me to answer that. I've always been an ABS geek, so I think they're, I spend a lot of time looking at them. I think certainly, Rob's point, how do you compare an RMBS structure to a bank balance sheet? I think banks, to me, when somebody asks me to look at those, I think they're pretty complicated. Yeah, I can sort of understand covered bonds because to me that looks like an RMBS, and I've got a bank guarantee. That probably means it's worth more. So banks, covered bonds should trade tighter than RMBS. How much tighter? Well, that really then starts to get into what's the expected loss on a covered bond versus an RMBS, and then it starts to get a little bit complicated. So, yeah, I think potentially they're certainly more complicated in some people's eyes, but fundamentally, I think actually when you get down to the basics of what's underlying, it's easier to understand what your real risk of loss is. Liquidity is a different story, but if you want to look at your absolute credit risk, I think they're probably a lot easier to understand.
You mentioned liquidity. Horishi, maybe I can ask you a question from the audience that's come through. And someone's text to say, how important is liquidity to you and other Japanese investors?
そうですね、当社に関してはですね、オーストラリアドルで預金を集めておりますので、やはりその外貨運用の中でやはりそのリクイディティというのはかなり重要だなというふうに思っていまして、今においてはですね、日本の銀行がですね、レポなどでですね、リクイディティのファシリティがですね、作れない状況ですので、リクイディティのファシリティなどが準備できれば、かなりですね、海外投資家もですね、投資しやすくなるのかなと思います。
It's basically like he is investing in Aussie RMBS by using Australian dollar deposits from Japanese consumers. However, he have to think about repo facility or something like in the futures, because once deposits are gone, so he have to fund Aussie dollars in a way.
Let's go back to Henry. We were talking about bullet tranches earlier. What can you do to make the product more appealing? And in terms of bullet tranches, are they essential?
Bullet tranches, they're not necessarily essential at all. Certainly, they are a lot easier for many investors to invest in, and they do. People do prefer that kind of structure versus an amortizing sort of pass-through. They certainly make it easier from the issuer's perspective in terms of if you're trying to structure cross-currency swaps into a structure. And so having a bullet, obviously trying to cross-currency hedge a bullet structure is a lot easier. But certainly not essential. We look at, for example, if you look at the predominant buyers, US investors, very much used to amortizing pass-through structures in the US RMBS market over with securities with average lives that can vary between sort of half a year and 25 years, depending on the interest rate environment. In Europe, half of the issuers, some of the issuers have elected not to use master trusts and bullet structures. Have gone for the pass-through structure, and I think if you want liquidity, the absolute most liquid sector in the UK is the bullet structures coming out of UK master trusts. But again, if you're investing in RMBS, really what you're being paid for, to my mind, is an illiquidity premium. And as an investor, I'm not 100% convinced that I really want masses of liquidity. What I really want to do is get a high yield for investing in something that fundamentally is a very strong credit.
Henry, you did mention those master trusts there. What about the costs associated with master trusts?
Yeah, it's certainly setting up master trusts is a bit of brain ache. A lot of people think that they're very simple structures because you get a nice bullet security. I worked on the first master trust structure rather longer ago than I'd care to admit, but for credit cards in the US. And I was the dumbest person on the team, and it took 6 of us 6 months to put it together, and it hurt. So the costs can be enormous in the initial setup, but obviously what you get then is not a complete, I apologise to lawyers in the room, but they don't completely reduce their costs for actually the ongoing issuance, but it does make repeated issuance a lot easier, a lot faster, and a bit cheaper. So it's worth it if you're going to be a consistent, regular issuer. And if you look at the UK mortgage master trust market, they vary in size from, I think the smallest is probably about 2 billion, going up to 45 billion. And I think you really need to be having an ongoing issuance program well into the billions to justify the costs.
And Hiroshi, maybe very quickly in your take on bullet tranches and master trusts.
Okay. そうですね、管理の容易さなどはですね、ブレッドはいいんですけれども、日本の証券化商品もですね、パススルーの商品がほとんどなので、この点に似てるのでですね、管理面では特段ブレッドであるマスタートラストにこだわる必要はないのかなと思います。
Japanese investors used to the bullet structure. However, Japanese RMBS are structured through our pass-through on a pass-through basis, so that it doesn't have to be like a bullets at all.
ただ試験なんですけどですね、マスタートラストの代表的なですね、隣で彼がお話ししましたけれども、有形の RA インベストはですね、やはりコールオプションがついたソフトウォレットが一般的なので、やっぱりエクステンションリスクをどう考えるかっていうのがですね、投資にするための論点になると思います。で、オリジネーターのですね、関与がスタンダードローンの方がですね、よりもマスタートラスト強くなるので、裏付け資産の分析ではなくて、オリジネーターのクレジット、分析が重要になるので、大きな金融機関に関してはメリット大きいんですけれども、リージョナルバンクとかですね、またはノンバンクなどではこれが逆にネガティブになってしまうこともあるので、クレジットが高いところにはいいと思うんですけれども、その他はなかなか難しい点もあるのではないかなと思っています。
Even if bonds are issued via the master trust structure, he thinks that he needs to look into an optional redemption feature. To invest in OZMBS master trust transactions, he would have focused on not only collateral but also issuer credits.
Robert, let's throw one to you that I was about to say viewer by habit. One member of the audience has sent in. What are the primary barriers to entry for new investors in RMBS?
Well, as a new investor, if I think back when I first started to look at these structures many years ago, I mean, it did look like, it was very complex and, a bit of a mystique. But, what I found once you start to look into it, and you understand, the very simple basics of the waterfall, the underlying loan contracts, how that works, the barriers don't become that apparent. So I think taking that first step is really sort of the first brave one. And if there's any new investors in the room, I think very simply, read the IM, understand the waterfall, and attend as much learning courses or literature that the ASF can possibly do. I say that selfishly because I'm the chairman of the education committee for the ASF, but there is a very open market in terms of where to gather data from and information, and your investment bankers and other supporting networks will provide that to make those barriers easy.
Henry, one question for you from the audience. Does Threadneedle see significant benefit if the regulator is allowed to call dates, particularly in relation to extension risk?
I think the issue for us when we look at extension risk is really driven by what we think the incentive is for the owner of that call option, which typically is the originating entity, and we look at that and see what's the probability and the benefit for them in exercising that. And as soon as we see the value of that option, the exercise of the option being negative to the issuer, we just assume that they're not going to exercise it, they're going to be rational, and it's going to extend. So our analysis is really driven purely by what we think the dynamics hitting the owner of that call option and whether they're likely to exercise it, and that's what drives it. We also look at the impact of how dangerous or bad or good is that extension, and that varies enormously from one issue to the next, one structure to the next, one tranche within one structure, and so on. So we're really looking at that in terms of what the economics incentives are, and that's really how we look at the extension risk, because it's always there. Even in master trusts or covered bonds, that extension risk is there.
Staying with you, Henry, any thoughts about how to solve the cross-currency basis swap obstacle for Australian issuers getting back into Europe, and are master trusts the only solution?
Master trusts are definitely not the only solution. They probably, for the people who issue a lot, probably the easiest. The other thing is just wait a bit, because the way spreads are going in Europe, and the funding for lending and the ECB programs are going to continue, in our view, to drive spreads tighter until you reach the point that issuers are likely to issue again, which is probably when AAA RMBS spreads are in the 10s over LIBOR, 10s maybe 15 over LIBOR, and at that point, the basis swap isn't really an issue. It's going to still be very attractive for Australian issuers to swap there. So, yeah, master trust certainly makes it a lot easier, and it's one of those things that just is going to fluctuate with time. It wasn't so long ago that we were madly trying to buy European-denominated Australian RMBS because they were much, much cheaper.
Hiroshi, your take on that, and as a follow-up question, given the yen AUD swap also being expensive, can you see Australian issuers getting yen mandates?
そうですね、まず最近のゴールドル建てのスプレッドがですね、150、ちょっと下がったところなんで、円換算にすると、パススルーのキャッシュフローのリスク入れると、60程度になるっていうことなんですけれども、日本の投資家としてはですね、RM ベースの海外商品に投資すれば一定のプレミアムをやはり望んでいますので、やはりスプレッドの水準次第かなと思いますので、この60ベーシスというのがいいかどうかっていうのは、やはり金融機関によって見方違ってくると思います。
Assuming spreads on Aussie RMBS are 150 basis point, and considering pass-through structure, yen tranches would be issued at 60 basis point. So Japanese investor may require that an issuer give them an extra spread on a yen tranche because Japanese investors need to conduct additional work to initiate RMBS investment. So whether they invest in the products depends on absolutely spread levels.
そうですね、仕組みはどうであれですね、やはりスワップカウンターパーティーのリスクもありますので、こちらに関してもですね、より焦点が当たってきていると思いますので、こちらに関してもかなりそのスワップカウンターパーティーをどうするかというのは、やはり次の課題としてあると思います。
If a deal includes a currency swap transaction, investors tend to look at counterparty risk regardless of deal structure.
Henry, maybe one on liquidity premium, if we can. How much of an impediment is it for Australian issuers given the lack of central bank repo and regulatory capital incentives for European issuers and investors?
Well, I think it definitely gives you a liquidity premium. The question is really what it's worth. And I think where we've seen that, to actually quantify that, that premium is typically in the region of 10 to 20 basis points. So yeah, there is a premium that you're going to pay for lower liquidity. And one of the things we've seen in Europe, and the reason why I guess the market was closed to Australian issues for a while, was everybody sort of, after the crisis, suddenly really wanted to get closer to home. So I think you'll also see just generally, investors will allocate a little bit of, require a little bit of extra spread if they're going to go into a product that's not in their own domestic space. Typically that means they've got to do a little bit of extra work and so on. But I think that the premium is relatively small, and obviously it depends on how the market is. So today, that premium is going to be very, very low because what people really just want is any kind of product that is giving them yield, and there's very little availability. So I think that premium will be there, but it is relatively small in today's environment.
I think we've just got a few more minutes to wrap up. So, Robert, maybe if we can get your predictions for Australian and global ABS and RMBS markets.
I think Henry touched on an interesting point there that I think coupled with the rally we're seeing in risk-free yields globally, I wouldn't be surprised that here in Australia we do see the zero bound getting approached over the forthcoming months or year. That has implications for this market. We are seeing larger groups of interested investors coming into the space. But also having said that, I think it will be met with supply. I mean, we saw the numbers on the board there. It's been a pretty dismal year for issuance. But with that pent-up demand, I think there's pent-up supply and that will be met. So I wouldn't see, even though we would see at the margin spreads coming in tighter, I wouldn't see a massive rally in spreads over the next 12 months. I think there'll be a supply adjustment coming to meet that demand.
Hiroshi, your predictions for Australian and global ABS and RMBS markets?
そうですね、リーマンショックの後はですね、やはりその裏付け資産などがですね、基準とかストラクチャーが強化されているんですけれども、日本に関してはなかなか海外証券会消費の投資はまだ、収めた状態が続いています。 そのためですね、やはりリーマンショック以前とは、商品が改善されているということと、投資家にやはり継続的なアプローチがやはり必要だなと思います。ただですね、スプレッドがですね、リーマンショック前のようにですね、かなりまたタイトになってくるとですね、なかなか投資が難しくなってきますので、ある程度スプレッドを乗せた状態でですね、発行されることを希望します。
Many Japanese investors have been still careful in being back to the securitization market, even if the structure and collateral selection process improved. Issuers should emphasize that the recently priced transactions have much more solid structures and are backed by high-quality loans. If spreads tighten up to levels where we saw during pre-financial crisis periods, it will be harder for Japanese investors to increase the size of their investments. So that he wishes that bonds should trade at some sort of justified levels where credit risk is taken into account.
Okay, and Henry, I'll give you just under 1 minute to look into your crystal ball.
Well, I guess I think you're going to see spread tightening in the Aussie RMBS market. I think foreign investors are going to want to kind of pile in. The relative value looks very compelling. And I think the sort of technicals in other markets are just going to continue to force investors to look for yield. I think that'll also couple itself, so you'll probably see reduced differentiation between the good, the bad, and the ugly as investors are driven more and more by yield.
Okay, very insightful. Appreciate your time, gentlemen. Please put your hands together for our panellists from all over the globe.